Hello YouTube, welcome back for another annual tax update video. This time for tax year 2023. We got a lot to cover, so we're gonna dive right in. I want to start off by saying welcome if you're brand new to the channel. My name is Mike Kelly and I am the owner of Mike Kelly CPA, and I've been in the public accounting profession helping people with taxes, accounting, consulting, and other related matters for now the past 13 years. The spreadsheet we're going to be looking at on screen together is strictly for United States federal income tax laws. In the description section below, I'll make sure that you have a downloadable link to the spreadsheet. It's completely free. It's the gift I give to all my viewers every single year, so I hope you enjoy. One of the biggest pieces of news before we really get into the details of the spreadsheet is that it was expected that for tax filing season 2022, which would be in 2023, that you would have to be subject to the new 1099K filing thresholds of $600 or more from third-party processors like your Venmos, your PayPals and things like that. Well, the IRS has announced today that it will delay the implementation of the American Rescue Plan Act's ARPA's lower $600 per payee 1099K filing threshold for third-party settlement organizations for payments made during the 2022 calendar year. This means that $20,000 per payee or 200 transaction thresholds will remain in effect for payments made in 2022. And I'll leave a link to this information in the description section of the video for you guys. And Secure Act 2.0 just passed, so I'll have to do a separate video on that. There's a couple points I want to go over, but the one thing I want to mention for starting in tax year 2023 that I think will be applicable to many people is the required minimum distribution age has moved up from 72 now to 73. So you do not have to start taking required minimum distributions, also known as RMD, from your retirement accounts, your qualified retirement accounts like your IRA, your 401k, things like that, until you reach the age of 73 starting in 2023. Each year, the IRS adjusts their tax tables for inflation adjustments. Because of the significant amount of inflation we've been seeing in our economy, all the money printing we've seen and everything going on, these inflation adjustments for 2023 are quite higher. And so what that means is your taxable income thresholds have increased, and that also means things like your standard deduction has increased quite significantly if we were comparing that adjustment compared to previous years because of inflation. So effectively what that means for you as a taxpayer in plain English is in 2023, you can make more money and you can still be in a lower bracket. That's what that means. So from a taxpayer perspective, that's a good thing. I'm not going to read these brackets to you. That would be extremely boring. But as a reminder, especially if you're brand new to taxes and just learning about this for the first time, you don't pay one income tax rate on your income. That is a huge misconception. Remember, guys, it's a ladder. So each portion of your income, as you make more money, is taxed at different rates. So your first set of income is taxed at 10%. The next set of income that's above the threshold you're seeing on screen is then taxed at 12%, and then 22, 24%, etc. Capital gain rates have increased quite a bit, which is quite nice. Capital gains is one of the most favorable tax rates you can receive as a taxpayer. And you get them from either getting qualified dividend income from investments, or if you have long-term capital gains from stock dispositions, meaning you have held that in security for more than a year and 1 day and then sold it. That gives you long-term treatment. And so under capital gain rates, you have special rates that apply. As a single individual, you can make up to $44,000, and as long as that's your only income, or roughly your only income, you'll pay zero in tax. If you're a married filing joint, believe it or not, you can make close to $90,000 and still pay zero in tax on that type of income. It's quite nice. Talking about the standard deduction. Now, this is an automatic deduction that every single taxpayer gets. You get to take the better of your standard deduction, which is a set amount given to you by the IRS every year, or itemized deductions if that is the greater benefit to you, whichever one is better. 90% of people now take the standard deduction, very few people itemize. With mortgage rates increasing, the interest rates, we're going to see more people starting to itemize, I think, in the future for those who just acquired homes. With the standard deduction, as a single filer, you can now get a standard deduction of close to $14,000 or $13,850, and as a married filing joint couple, it's $27,700. Relating this back to the taxable income rates. When we make money from wages, let's just say that we make $100,000 a year in wages and we're a single filer. Well, we don't pay taxes on 100 grand. That's not how it works. We actually pay taxes only on our taxable income. And our taxable income is calculated by taking the total amount of income we receive, less adjustments or adjustments to gross income, less the standard deduction or itemized deductions. Which means if you get the standard deduction, you would subtract one from 100,000, you would subtract 13,850, and that is the amount of your taxable income, and that is actually what you pay tax on. You don't pay tax on the full $100,000 amount. Medical expense thresholds still 7.5% from what I could find, which means that in order to deduct anything for medical, you have to have medical expenses that exceed 7.5% of your current taxable income in order to get a benefit from it. And furthermore, you have to be able to itemize to be able to get a benefit from your medical expense deductions. Let's talk about the child tax credit. This seems to be a credit that has been in flux over the past several years. In 2021, if you recall, the child tax credit got a big boost. It went from $2,000 per child to up to $3,000 per child. And for children under the age of 6, they got up to $3,600 per child. Massive increase, right? For 2022, the tax filing season that's going to come up soon, that's got adjusted back down to $2,000 with a refundable amount of $1,500 of the credit is refundable. But for 2023, as far as we know of right now, that's currently set at $2,000 per child like it used to be, and the refundable portion is up to $1,600. Now for 2023, they might change this down the line. We don't know. Just see if there's an update throughout the year, but we could potentially see changes to this in legislation down the road. But for now, I would predict these numbers. Saver's credit, I'm not going to go into too much detail. It's a fantastic credit if you can get it. The problem is, from my experience in the profession and working as a CPA, hardly anybody can get this. I think in my entire career of about 13 years or 14 years now, I've only seen a small handful of people be able to receive the credit. The credit did get some AGI adjustments to higher income thresholds, which is great. But the reality is most people, they just make too much money in order to even contribute to this. So really the only people who can contribute to this, in my opinion, or in terms of who I envision can qualify for this, is somebody who is low income, young, very young, and living at home. Maybe they have a good job, but they're still living with mom and dad, and they have little to no expenses, and they can save money for retirement. Those are the kind of individuals I can see who can qualify for this. But like 99% of the people, at least that I come across and on my client base, cannot qualify because of the low income thresholds. State and local tax thresholds still the same. You're limited up to $10,000 on terms of deductible property taxes and other income tax expenses. Mortgage interest deductions and limits are still the same. All that's still the same how it has been. We don't expect any of this to change until after 2025 at this point. So that's just all the same. Education, the student loan interest deduction is still $2,500. There's a few AGI adjustments to this information, which allows you to make a little bit more money and still be able to take advantage of the student loan interest deduction, which is good. It's just like a $5,000 increase roughly. So nothing massive, but you can make a little bit more money and still qualify for the loan interest deduction. The biggest changes that I'm most excited about are the retirement plan contributions. Let's talk about retirement plan contributions. We're talking about 401ks, 403bs, etc. Starting in 2023, you can contribute up to $22,500 now to your 401k in a single year if you're under the age of 50. And if you're over the age of 50, you contribute up to $30,000 to a qualified retirement plan. Comparing this to 2022, this is almost like close to a 10% increase of what you can put away now, which is great. Not only that, my favorite type of accounts, Roth IRAs, have also gotten a boost in terms of what you can put away. In 2022, we could only put away $6,000 per year if we were under the age of 50, but now that it's increased by another $500. So $6,500 starting in 2023. And if you're over the age of 50, you contribute up to $7,500. And that is for both traditional IRAs and Roth IRAs. We can contribute more than before. Whenever I can invest money get tax-free treatment going forward, I'm going to start and prioritize my investing that way. So that's why I look forward to contribution limit increases in these areas each time. And then on the right-hand side of the spreadsheet, you'll see what the income phase-out ranges are for you to be able to contribute to these type of retirement plans. Most of you are probably already aware of this, especially if you're retired, but the Social Security increase or cost of COLA adjustment is 8.7% for 2023, which is great. The also not listed here, but the amount of your wages, if you're making a living through wages at a job, in 2022, up to $140,000 of your wages would be subject to that FICA tax, which is a 6.2% Social Security tax and a 1.45% Medicare tax, which makes up that 7.65% number. Now they've increased that threshold even more from 140 to 160, so now up to $160,000 of your wages will be subject to those taxes and help keep funding Social Security. Okay, gonna keep on going here. The alimony rules, if you're paying spousal support, still the same. They've been in effect the same way since 2019 or 2018. Not gonna cover that, but the information's in the spreadsheet. If you want to gift somebody money, you can now gift them up to $17,000 per person. If you're a married couple, both giving them money per person, you can give up to $34,000 per person. That's before filing a gift tax return. Huge misconception is if you give somebody a gift, do you have to pay tax on that money? No. Do they need to pay tax on that money? No. The reason is because the federal and state exemptions are so incredibly high right now. You can have over $12 million in assets, which is hardly anybody anymore except the ultra rich, and still pay no estate tax when you die. So that's good. And if you're married, you can have nearly $25 million in assets and still pay close to no estate tax. Now, they might adjust that down in the future, but anyways, with gifts, just know that if you give somebody money, as long as you don't give them over that exempt or exclusion amount of like $17,000 in this example, then you do not have to file a gift tax return. Anything in excess of that, you do have to file a gift tax return with the IRS. Moving on, HSA contribution limits. It's now $3,850 per person. Our family is $7,750 for a family. Remember, you cannot, even if you have a family, you cannot contribute more than the total limit of $7,750. Irregardless, if you do that, you're going to be subject to penalties. If you over contribute, you're going to have to pull the money out of that account to avoid penalties when you file your taxes. So just remember that HSAs are fantastic, but you have to have a high deductible health insurance plan in order to be able to put money away in these type of savings account. But it's one of the few things that has no income limit threshold. It's absolutely worth taking advantage of if you qualify, because it's just basically saving you money in taxes and saving you money on medical expenses. It's a no-brainer. Like, it just doesn't make sense not to do it. Adoption credit is here if you want to look at that. You can see the earned income credit amounts have changed a little bit in terms of the ceilings and plateaus. Those are listed here. And let's go moving on down the line here. Standard mileage rates for 2022 was 62.5 cents. And as far as we know for 2023, the mileage rate is 62.5 cents as well. That might change, but that's what it is currently. Talking about business deductions here real quick. If you're a sole proprietor, if you own a business, a pass-through entity kind of business, then you can usually take advantage of the QBI deduction as long as your income, if you're single or head of household, is under $182,000. And but once your income goes over $232,000, then that starts to phase out if you're a single filer. If you're married filing jointly, you can make up to have taxable income of $364,000 before the phase out begins. But your taxable income, once it's over $464,000, you're going to be fully phased out of that deduction. Remember, the QBI deduction is basically whatever you make in business income, your net business income times 20% is roughly, give or take, the QBI deduction amount. That's what to expect there. Very close to what that actual deduction is. So it's quite nice because the QBI deduction reduces your taxable income if you're a business owner. Huge advantage for business owners. And as we scroll down the line here, we're going to see that penalties are still in effect. You can see the interest rates and the failure to file penalties are quite steep. So remember to file timely. And I've included the filing instructions of when you need to file for tax year 2022 right here, because remember your tax return for 2022 is going to be due. The initial due date is 4/17, I believe, this year for 2023 in terms of that due date. So I hope you guys found this video helpful. Please leave your questions, comments down below, and I will try to do my best to respond. Now, I have found that it's been difficult to make new content on YouTube as a business owner. You know, I've been so incredibly busy with my accounting practice. It's grown very rapidly, which I'm very thankful for, but producing new content on YouTube has been very challenging. But I miss all of you guys. I love being here. So I'm going to try to find a way to get back to be able to produce a little bit more content in 2023, hopefully. And we'll see how that goes. And I think it's going to involve me hiring some people to help me out on the accounting practice side in order to achieve that. Well, I hope you found this update helpful. Remember, the spreadsheet and everything else is in the description section. I'll include a link in the comment section as well. I hope you have a wonderful 2023 and a great new year. If you want to see more content like this, be sure to be subscribed because I'll be doing more live streams throughout the year and more tax updates as things go along. So I'll try to produce as much content as possible, even though it's been so challenging, working so many hours. But all right, guys, well, you've been a blast. Thank you so much. I'll see you in the comments and have a great week.